Here is the supply-demand numbers from the Silver Institute. Industrial, electronics, electrical, brazing alloy, other industrial. There is no military information in there. And when you look at this is the right now COMEX. The red line represents the big four commercial banks who hold the largest position, and we can guess who they are. Bank of America, maybe Citibank, JP Morgan, whoever they are. And the green line represents the 8 commercial banks, the big four plus 4 more. It's 8 Western banks holding the largest concentrated short position in any commodity traded. And this is what is happening as a result. This is the LBMA numbers. You can see this drawdown. They are using the suppression to draw down the metal held by the West. And I would argue it's because of the military industrial complex. I've given speeches in Vancouver, where I'll see you in January, where I've said there's 500 ounces of silver in the tip of a tomahawk. 2 years ago, a man came up to me and said, I work for the DOD. I helped design the tomahawk. I know there's silver in it. I'll let you know. He came back this last year, January, 11 months ago, and he said, I'll be damned, you're right. There is between 13 and 14 kilograms in the cone of every one of these sophisticated missiles. And he showed me all sorts of pictures. But when you realize that in 1942, they needed 200 million ounces a year of silver for war effort, and now the high-tech weaponry is so much more sophisticated, and you need things like silver to make this high-tech weaponry. And we're fighting wars all over the world, often funding or providing weapons to both sides. Why would 8 Western banks be that stupid to hold the price down, Kai, when Russia is now part of our strategic stockpile, when India is purchasing 900 million ounces over the last 4 to 5 years, when China, the second largest producer of silver in the world, and they tell David Morgan when he went over there that they're the largest producer. But why are they going to Sean Kuhn from Dolly Varden? He said, yes, this is happening. They're going to South America. 78% of all the silver they're using right now for industrial applications comes from concentrate. They're going right to the miners and saying, give us your sludge, your concentrate, and your doré. We'll pay way more than the West will, and we'll refine it back in China. If they're the second, maybe the first largest producer in the world, why the hell are they doing that? Why are they flying all the way around the world to buy uneconomical silver in the form of concentrate or doré and paying to ship it back home to China, which disintermediates the market and the price? Why would they do that if silver wasn't strategic? It's not that it's an industrial metal that they massively need. That's why they're doing this. It's because they realize silver is far more strategic than we are led on to believe. And ask it another way. Why would 8 banks risk an existential threat to themselves by doing this? And we're playing right into the hands. You see that drawdown. We're playing right into the hands of these countries who know what we are doing. Now, let me answer it a slightly different way and say the BRICS grain exchange is in development right now. And the gentleman who's running it said, we produce more wheat and consume more than the West does, yet we can't control its price by any metric. It's controlled on COMEX. But when the BRICS grain exchange is up and running, that will change.
When it comes to silver and gold, the conversation is never merely about metals. It's about strategy, control, and global dominance. The modern battlefield for these precious resources stretches far beyond jewelry, coins, or investments. It's embedded in the machinery of economic warfare, geopolitical alliances, and technological superiority. Silver, in particular, has emerged as a linchpin in industries ranging from solar power to high-tech weaponry, making it as strategic as it is undervalued in Western financial markets. Let's start by analyzing the numbers and then dive into the implications. According to the Silver Institute, industrial demand for silver is skyrocketing. By 2024, estimates suggest that global consumption could reach 1.4 billion ounces. That's unprecedented. Historically, no period has seen demand reach these levels. And yet, the red line on the COMEX charts tells a different story. A disturbing one. This red line represents the concentrated short positions of the big four commercial banks. These are the giants like Bank of America, Citibank, and JP Morgan, entities that hold the largest short positions in any commodity market. The green line expands the scope, showing the positions of 8 commercial banks. Together, these institutions dominate silver's paper market, creating what is arguably the most concentrated short position in the history of commodities trading. What does this mean? It means these banks are actively suppressing the price of silver, using the paper markets to create a disconnect between the metal's true value and its traded price. But here's where it gets fascinating. Despite this suppression, global inventories of silver are dwindling rapidly. Look no further than the London Bullion Market Association (LBMA) numbers. The stockpiles in LBMA vaults have been declining at an alarming rate. Why? Because nations and industries around the globe are exploiting this artificially low price to stockpile silver, a strategy that many Western policymakers appear blind to. Consider the role of silver in military applications. During World War II, the U.S. used 200 million ounces of silver annually for the war effort. Today, high-tech weaponry like Tomahawk missiles requires silver for their advanced systems. A Department of Defense insider recently confirmed that each missile's tip contains between 13 and 14 kilograms of silver. This isn't a luxury, it's a necessity. Modern warfare depends on silver's unique properties, its conductivity, malleability, and resistance to corrosion. If silver's strategic importance was clear during the mid-20th century, it is even more so now. The demand for high-tech weaponry has skyrocketed as nations engage in geopolitical power plays, often arming both sides of a conflict. The result? An insatiable appetite for silver. So why are Western banks suppressing silver prices? The answer may lie in geopolitics. Russia, China, and India, key players in the BRICS alliance, are hoarding silver as part of their strategic reserves. China, the second largest producer of silver globally, is importing concentrate and ore from as far away as South America. They are paying premiums to disintermediate Western markets, refining these materials at home, and removing them from the global supply chain. The aim? Strategic advantage. What happens when the West runs out of silver? The answer is simple. The power to set prices shifts to the East. Exchanges in Shanghai, Dubai, and Moscow will take over, and the COMEX and LBMA will become relics of a bygone era. The manipulation that has kept silver prices artificially low will collapse under its own weight. This isn't speculation, it's already happening. Follow the breadcrumbs and you'll see that nations are preparing for a future where silver and gold play a central role in the global financial system. Western commentators often lose sight of this long-term strategy, focusing instead on short-term price fluctuations. But the bigger picture is clear. The East is methodically accumulating precious metals, positioning itself for a seismic shift in global power dynamics. Silver's journey from undervalued industrial metal to strategic linchpin is well underway. The East's methodical approach, combined with the West's short-sighted price suppression, is creating a perfect storm. When the dust settles, those holding silver and gold will find themselves on the right side of history. The question isn't if this shift will happen, it's when. And when it does, the implications will be nothing short of revolutionary.
Now, you could just substitute that thinking with the BRICS Precious Metals Exchange, which is in development. They know what we are doing, that we are controlling and suppressing on paper the price of gold and silver and other commodities, and they are using it against us. Like jiu-jitsu, use your opponent's leverage against us. So it is a massive deal. That's why I've always been fond of the term logarithmic decay, little by little by little, then bang all at once. Well, that's exactly what you're seeing with the drawdown in the silver inventories and the fight by the Western institutions to suppress its price. But you can only manipulate or suppress price, or manipulate price would be a better way to say it, over an extended period of time, Kai, by pushing it in the direction it's going. And all of the years I've been doing this, no one stood for delivery. It's that backdoor option where, yeah, you can stand for delivery. No one ever did. But these countries are sophisticated, motivated, coordinated, and wealthy as hell, and they know what we're doing, and they're using it against us methodically. People would think because we live in an environment where instant gratification is too slow, we need it to be right now. Well, they're like, no. We can't just throw $5 trillion at the market and buy everything because it will be over just like that. But instead, we'll play the game with them, and we'll just continue to slowly stand for delivery, go around the country and use proxy banks around the world, use proxy banks or use the PLA to do it, or buy through sovereign wealth funds, or quietly stand for delivery. Not too much to freak out the exchanges, but just enough so we can bleed them dry, death by 1,000 paper cuts, and you wake up one morning and there is no one stupid enough to offer at these make-believe prices in the West. And just like that, everything switches to Shanghai, to Dubai, to Moscow, to the BRICS exchange, and the price setting will move from the West to the East. It's a long game. And look, I will fully acknowledge silver is enough to drive someone insane because it's very counterintuitive. But this is a battle going on not only between the industrials and the hedge funds or the manufacturers and the investors, but also between the East and the West. And I think it is the Achilles heel to the entire system. Easier said than done to follow that belief, but watch what's happening, follow the crumbs, and you'll see this is what they're doing. And they're doing it in a very judicial and methodical manner so as to extract maximum amount over a period of time without causing an uproar or a congressional hearing or President Trump to say, no, we need to stop allowing delivery of our critical metals. That hasn't happened yet. And that's why it's happening. It's been happening over 4 years, but in a way that really is slow enough to make even the commentators lose sight of it.
As we delve deeper into the dynamics shaping the global gold and silver markets, the intricacies of geopolitical strategy become unmistakable. The West's reliance on financial dominance and its continued manipulation of commodity prices may appear advantageous on the surface, but reveals a significant Achilles heel when juxtaposed against the long-term strategies of emerging powers. The evidence of systematic accumulation by BRICS nations and their allies is undeniable. Nations like China and India, which are traditionally viewed as gold powerhouses, have expanded their portfolios to include silver. For instance, the revelation that the People's Liberation Army, PLA, and Chinese sovereign wealth funds are actively purchasing silver concentrate and doré from South America underscores their commitment to a resource-driven strategy. But why concentrate on silver? Beyond its industrial uses, including its application in solar panels, electronic components, and medical equipment, silver's strategic importance becomes apparent in military applications. The statistics shared regarding Tomahawk missiles containing upwards of 14 kilograms of silver per unit highlights just how vital the metal is in modern warfare. It's not merely about economic value, it's about securing a critical material that underpins technological superiority and military readiness. When viewed through this lens, the decision of nations like China to acquire silver through unconventional means, such as bypassing traditional markets, becomes clear. These nations recognize that by securing physical assets outside of Western-dominated exchanges, they can simultaneously undermine the financial leverage of their geopolitical rivals and prepare for a world where monetary value is increasingly tied to tangible resources. On the other hand, the West's approach to maintaining financial hegemony has revolved around the manipulation of gold and silver prices. By suppressing prices through paper contracts and derivatives, Western banks have created a facade of stability. The chart highlighting the 8 major banks holding disproportionate short positions in silver contracts paints a damning picture of an unsustainable strategy. Why would these institutions take such risks? The answer likely lies in the interconnected nature of Western financial systems. By keeping silver prices artificially low, the industrial sector, including the military-industrial complex, can continue accessing these critical materials at a fraction of their true market value. However, this approach carries significant risks. Firstly, it leaves these banks exposed to catastrophic losses if the paper markets collapse. Secondly, it incentivizes Eastern nations to continue their methodical siphoning of Western silver reserves. As the speaker aptly noted, this is a classic case of logarithmic decay, a slow, almost imperceptible erosion that eventually leads to sudden and dramatic consequences. A particularly fascinating aspect of the silver narrative is its intersection with military demand. While traditional industrial applications like solar panels and electronics drive a significant portion of global silver consumption, the military sector remains an underappreciated player. Historical context provides valuable insight here. During World War II, the U.S. government requisitioned 200 million ounces of silver annually for its war effort. Today's advanced weaponry, ranging from drones to missiles, relies on even greater quantities of silver due to its unique properties of conductivity and durability. This isn't just about economics, it's about national security. Yet by suppressing prices to ensure affordable access for industrial and military purposes, the West is inadvertently accelerating the depletion of its own reserves. As the speaker pointed out, nations like Russia and China, aware of the strategic importance of silver, are methodically draining Western inventories. This is not merely an economic maneuver. It is a calculated strategy to weaken the West's long-term position in a resource-constrained world. One of the most intriguing developments in the geopolitical landscape is the establishment of alternative trading platforms by BRICS nations. The proposed BRICS grain exchange serves as a prototype for similar initiatives in precious metals. If successfully implemented, a BRICS precious metals exchange could fundamentally alter the dynamics of the gold and silver markets. Currently, the price discovery mechanism for these metals is dominated by Western institutions like the COMEX and LBMA. However, these platforms rely heavily on paper contracts rather than physical delivery. By creating an exchange that prioritizes physical transactions, BRICS nations can challenge the legitimacy of Western price-setting mechanisms. The speaker's analogy of jiu-jitsu, using an opponent's leverage against them, is particularly apt here. By exploiting the West's reliance on paper markets, the BRICS nations can gradually shift price discovery eastward. As the speaker emphasized, you can only manipulate prices in the direction they're already heading. For decades, the West has managed to suppress gold and silver prices by leveraging the strength of its financial institutions and the perceived stability of the US dollar. However, this strategy is reaching its breaking point. The ongoing drawdown in silver inventories is a glaring warning sign. Whether through sovereign wealth funds, proxy banks, or direct purchases by state actors, the East is systematically depleting Western reserves. This isn't a random occurrence. It's a deliberate strategy to gain leverage in the global financial system. When the tipping point arrives, when there's simply not enough physical silver to meet demand, the repercussions will be swift and severe. Prices could skyrocket, and the ability of Western institutions to control the narrative will crumble. This will mark a seismic shift in the balance of economic power, with the East emerging as the new epicenter of resource-driven finance. So what does this mean for individual investors? The speaker's advice is clear. Follow the breadcrumbs and position yourself accordingly. While the volatility of silver markets can be frustrating, the long-term fundamentals remain overwhelmingly bullish. Investors should consider allocating a portion of their portfolios to physical metals rather than paper derivatives. Unlike ETFs or futures contracts, physical ownership provides direct exposure to the asset without the risk of counterparty failure. Moreover, as the speaker noted, silver's unique combination of industrial and monetary uses makes it an unparalleled investment in today's uncertain economic environment. Finally, the narrative surrounding silver and gold serves as a cautionary tale for Western policymakers. The strategy of suppressing commodity prices to maintain economic dominance is inherently flawed. By prioritizing short-term gains over long-term stability, the West is ceding strategic ground to its geopolitical rivals. To reverse this trend, Western nations must adopt a more transparent and sustainable approach to commodity markets. This includes reducing reliance on paper markets, increasing domestic production, and reestablishing trust in their financial systems. Failing to do so risks not only economic decline, but also a loss of geopolitical influence. The dynamics of the gold and silver markets are far more than an economic story. They are a reflection of the shifting tides in global power. As Eastern nations continue to accumulate resources and build alternative financial systems, the West faces an existential challenge. For investors, the message is simple. Position yourself on the right side of history. In a world increasingly defined by resource scarcity and geopolitical competition, gold and silver are not just assets. They are lifelines.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.